Good evening, everybody. I'm Pierre Roberge, the Daily Trader. It is February 15th, and we are going to take a look at Tesla stock from a technical analysis perspective. My goal in doing these videos is to help you understand how you can use technical analysis to make better trading and investing decisions. But I'm not a financial advisor, so please do your own research and make your own decisions. So Tesla is up $4.99, 2.38%. Closed at 214.24. Post-market, we seem to be up by almost $1. Let's now look at what all these numbers right here mean on the chart. So let's see. Yesterday, remember, we had this big green candle and we recovered, and I should change some colors right here. So we recovered 198.12 and 205.16. We recovered them. And today the question was, well, okay, are we going to stay above 205.16? Because on February 9th, we broke 205, but then we came back underneath it. But now today, what I am very glad to see is that we stayed above 205.16. That's one thing. And then we retested it. So we came back down, and this is a perfect technical day. We came back down to 206.11, 205.16, 206.11, that's $1 off. That's pretty good if we are considering this horizontal resistance, but we are really close to perfection if we are considering this bullish channel resistance slash support. So this one right here, this is pretty much perfection right on it. Let's go see on the 1 hour chart how the day happened. So we had a little bit of volatility during the first candle of the day. The red candle, we went up, we went down, but this is where we touched our first channel resistance, which is now support. There was a lot of volatility right here. Second candle green, then we are seeing some resistance. I'm not making this up. Look at this. Look at this. We had a little bit of intraday resistance at 213.42. 213.42. This is intraday. Look at this. On February 9th, we could not cross it. We tried for 3, 4, 5 times, caved in, came back today, tried it first hour, third hour, fifth hour, and now on the last candle of the day we broke it. So this is a good news. People are willing to buy higher than 213.42, which they were not willing to do during the beginning of the day and also on February 9th. So in terms of the 1 hour chart, we had recovered yesterday. This is now good. The stochastic is super high and all of our indicators on the 1 hour chart are great. We are overbought on the 1 hour chart also. Let's go back to the daily chart. So let's look at our indicators. So we have a stochastic at 99.54, extremely high. Everything is super great. We are bullish. We are overbought again on the daily chart. Everything else is great. And we have the VIX that came down by 0.70. We are going to take a look at that in a few seconds. So basically, unless there's some big bad news that come out, we should be continuing, and the next big resistance for Tesla is this one right here. So as I mentioned, depending on when we hit that, it could be at 250, it could be at 230 something. We have a little bit of horizontal resistance also. This is a minor one, I would say, at 233.24. So expect a little bit of resistance right there, but our target so far is around 250. And then we are going to hit this big downward channel. So we are still in a downward channel with Tesla. And Tesla is still in a downtrend. If you look at the overall trend of Tesla, this is still a downtrend. But right now we are rebounding within a downtrend. We should keep that in mind. Yes, this is giving us a nice swing right here, but this swing might be stopped by this resistance here, and we also have another one right here. Let's not think that we are going to reach back 400 super easily. No, it won't be easy. We need to break this, and we need to break this too. These are the two major ones. But it seems that the win is in Tesla's sale. So let's look at the VIX. VIX is down after having been up even with a good stochastic. So this was quite scary. This could have gone a lot higher with the CPI and everything. But this is coming down pretty far. And I can't help but see this. We have support at 1906. But then the support at 1906 was broken at some point, and we have support at 1846, and we keep busting that support but bouncing nonetheless. So I have no choice but to put that support right here, 1789. So 1789 was touched right here on Friday the 13th and also Friday the 27th. Maybe we are just going to bounce on that. We need to take that into account. Let's hope not, because this low of a VIX is helping us a lot. Let's hope that even if it does not break below 1786, at least this is a low VIX. Below 20 is a low VIX. The stock market should be able to go up a little bit with the low VIX. Let's look at Dow Jones. So Dow Jones, nice day, sideways day. We still have stochastic still in a congestion zone, so not much to see here. And now we have S&P 500 that has just broken its downward resistance. So this is a good sign. S&P should be continuing that move. So when a stock tries a resistance and cannot break it, whether it's a horizontal resistance or diagonal resistance, when it cannot break it for a while and then starts to break it, this is usually the sign that things are going to continue. This is why we are drawing all these lines, because these are milestones or stake in the sand, and when we break those lines in the sand, then it means that something has significantly changed in the market to suggest that it should continue. And we always like to have a stochastic over 60 at the same time as we have a break, which we have right here. So S&P should be continuing up. Nasdaq Composite exactly the same. Let's just ride this pony into the horizon. Thank you very much for watching. Thank you for liking, commenting, subscribing. If you like what I do, you can become a YouTube member. Click on my TradingView affiliate link. I'm going to wish you a great evening. We are going to talk tomorrow, and I'm going to tell you à la prochaine.